Today's mortgages are not one size fits all. That means you've got lots of options out there that could help your home purchase fit your budget and your finances. This is good news for many home buyers. However, you do need to do your homework first so that your mortgage application can be processed properly and successfully, and so that your purchase goes smoothly. By doing this work in advance, you can avoid any problems when you least want them to appear. So in this video, I'm going to tell you the exact steps that you need to take to get the best mortgage for your budget. My name is Vilija Truelove. I'm a local Durham Region real estate agent, and if you're moving to or within the Durham Region or surrounding areas, you can set up an appointment through my calendar link in the description below, or just send me a text or an email to start the process. And don't forget to subscribe so that you don't miss any of my future videos. So step number 1, evaluate your affordability and complete a very detailed monthly budget. Do you know how much mortgage you can actually afford and how lenders determine that amount? Lenders look at a variety of factors to determine how much of a mortgage you can qualify for. It's first based on your income and down payment, but they'll also look closely at your credit score, as well as any other debts you have, like credit cards, student loans, and car payments. Based on all of these factors, they'll calculate your GDS, which is your gross debt service ratio. This is the ratio of housing costs to pre-tax income. Housing costs include mortgage payments, property taxes, heating, and if necessary, condo fees. They'll also calculate your TDS, the total debt service ratio. This is the ratio of total debt payments to pre-tax income. Total debt payments include housing costs, plus any other debts that the borrower may have. Lenders use GDS and TDS ratios to determine how much a borrower can afford to borrow. A lower GDS or TDS ratio is better as it indicates a lower risk of default. Borrowers with higher ratios may have difficulty getting approved for a loan. But wait, let's hit pause and ask this question first. How much are you actually comfortable spending on a mortgage payment each month? Asking yourself this question is the best first step to take to determine your affordability, because some of you will want your monthly housing expenses to be lower than what a bank is willing to lend you. Plus, the banks qualify you based on your gross income, and we all know that's not what comes home with you. So, to begin, you want to carefully look at your monthly budget, including current expenses and future ones as a homeowner. You ideally want to list everything: groceries, car expenses, daycare, that daily coffee you get at Starbucks, and include the extra expenses that will come along with homeownership, like property taxes, utilities, and insurance. Also include money you put away for retirement or school savings for your kids. The more detailed you can be with this, the better, because what you have left at the end of it is ideally what your mortgage payment will be. Now, if this number left over isn't going to get you a home that you actually want to live in, if you've been very detailed, this is where you can start to look at where you can make adjustments. Your monthly payments go up about $50 for every $10,000 that you go up in mortgage. So if there are things that you're willing and able to cut out of your budget to get you into the home you want, then you can see exactly where to do that. If you'll be buying and selling a home, this is also the time to speak with your real estate agent about what your current home's worth and how much equity you have in your home to use as a down payment on your new home. This is also when you can explore whether my favorite investment strategy could work for you. It involves keeping your current home as a rental property and purchasing your new home with the equity in your current home. It isn't an option for everyone, but if it works for you, it's an amazing way to build wealth through real estate. And this is also a good time to plug your numbers into one of those online calculators and start to get an idea of how much of a mortgage you might qualify for. Another very rough estimate, it's about 4 times your income plus your down payment. So step number 2, shop around and interview lenders to find the best fit for your needs. You can talk to several lenders at different banks, or better yet, work with a qualified mortgage broker and let them do the negotiating for you. If you need a referral, just reach out. I have contacts for some fantastic mortgage brokers. These guys are the professionals and can help you figure out what can work best for your situation. So they can help you decide between fixed or variable rates, what amortization to take, and also with other important things to consider other than just the rate. For example, can you port the mortgage? If you need to break the mortgage for whatever reason, what are those fees going to be like? There's a lot to consider. I will also add that through the years, I've had different clients in different situations where banks have said no to a mortgage, but a creative mortgage broker can offer different options that you might not have even thought of. Step number 3, get fully pre-approved, not just quickly pre-qualified by your lender. So this is where you complete the actual loan application with your lender. You want to make sure to take it one step further and get a full pre-approval and not just a verbal, you should be okay for this amount pre-qualification. By doing this, you will know exactly what mortgage amount and purchase price you'll be approved for. Remember to take your monthly budget into account no matter what the bank approves you for. But this does give you the go-ahead to look at homes in a certain price range. So to start this process, you'll need to supply information to the lender along with your application. The mortgage broker or bank will perform an extensive check on your financial background and your credit rating. You'll also be required to provide proof of your income through usually an employment letter and recent pay stubs, and possibly a T4. If you're self-employed, they'll want to see at least 2 years of income history. Finally, you'll need to provide proof of your down payment. So if the funds are in a savings account, RRSPs, or if it's in the form of gift letter, if the down payment will be gifted from family. This process is an important step for a few reasons. First, it will put you in a better negotiating position with the sellers. Your pre-approval signifies to sellers that you're a committed buyer who has financing secured. Second, though you may still require a financing condition on your offer, because the house itself still needs to be approved, you can be confident in knowing that you are qualified for that mortgage amount. You won't be wasting your time viewing and offering on houses that you actually can't afford. And lastly, step number 4, commit to a lender once you're under contract. Once you find your dream home and you submit an offer, the purchase documents need to be sent to either the mortgage broker or the bank. Then typically within a few days, since you've done all the other work in advance, you'll receive a commitment letter. That's the bank officially offering you a mortgage for that specific house. Once you receive a commitment from the bank during the conditional period of your offer, as long as you're satisfied with it, you can remove the financing condition to firm up your offer. And then you'll need to go in and actually sign the mortgage documents at the bank. It's at that point that you are committed to that lender and can no longer shop around for rates or for different lenders. So as you can see, there are certain steps that you'll need to take to get a mortgage. And the best way to know what you should do is to talk to an expert. So set up a time to talk with me and I'll walk you through your options and also connect you with a couple of fantastic mortgage brokers to start the process. And if you're wondering more about the home buying process and how everything works, here's a great video to watch next. Thanks so much for watching.